Hey guys, welcome to another episode with me, Shashank Udupa. And in today's episode, it's slightly different. We're going to try and understand basically how Peter Lynch approaches the stock market, and according to his approach, right, and according to his parameters, which sector in India might actually win according to Peter Lynch's theory. Okay, so let's understand that and a little bit more in detail in today's episode. So stay tuned. Now, first of all, who's Peter Lynch? Peter Lynch is basically a fund manager in the US, and he was at the helm of Fidelity Magellan Fund for 13 years. And during his entire tenure, the fund's AUM grew from $18 million to $14 billion, which also gave investors an annualized return of 29% and was on the top ranked equity mutual fund. And basically, if you had invested in their company, you would have seen your wealth monthly multiply by 27 times, which is amazing, right? Now, Peter Lynch's approach focuses on looking at those companies that stay away from the limelight, the undervalued, silent companies, sectors temporarily unpopular due to the external circumstances, and searching for investment idea from day-to-day experiences. Now, Peter Lynch basically believes that an average retail investor like me and you, backed by the right tools, could easily beat professional fund managers on Wall Street, right? Now, these principles have been properly done in his 3 books, which is One Up on Wall Street, Beating the Street, and Learn to Earn. Now, retail investors reading about Peter Lynch can benefit in 2 major ways. One, they realize that some inherent advantages the retail investor possesses over fund managers. Basically, some of the advantages include the absence of any restrictions on buying small cap stocks, to their ability to find some great periods during these day-to-day interactions. And 2, these books give real life examples of both Peter Lynch's success and his failures, right? Now you understood who Peter Lynch is, but now let's look at the methodology of Peter Lynch and how we invest in companies. Now, in order to get Peter Lynch type companies, we applied the following quantitative filters. Number 1, 5-year earnings growth more than 15% but less than 30%. Number 2, debt to equity ratio should be less than 1. ROE, which is return on equity, should be more than 15%, and PE, which is price to earnings ratio, should be less than 15, which means it's slightly undervalued. And finally, institutional holding should be less than 30%, but it should also be a net cash company, which should be positive with respect to cash flow. And the number 1 company which falls under all of this category, according to Peter Lynch, is Finolex Industries. Now, Finolex is basically a company established in Pune, headquartered in Pune, and is a leading manufacturer of PVC pipes, right? Now, U-pipes and fittings and PVC resins is what Finolex does. Now, Finolex Industry basically has strong backward integration into PVC manufacturing, a very good balance sheet as well, and very reasonable valuations, and that is why, according to this methodology, that has been picked. Now, let's look at the investment thesis. Now, the global PVC pipes market would grow at a CAGR of 5.32% during 2021 to 2026, partly due to the pipes gaining popularity across the globe owing to their favorable properties such as lightweight, cost effectiveness, easy installation, and it's very durable, right? Now, replacement demand for these different type of stuff have not come as well, right? So notably, this is a rust-free property and the ability to withstand vigorous and rigorous shaking and extreme movement in the earthquake prone zones as well. Now, further, if you look at the new technology that is coming, they are applying molecular orientation in PVC pipes, which is basically resulted into a new thing called PVCO, which is PVC oriented pipes, which are now more eco-friendly, cost effective, and is much stronger, right, than the conventionally produced PVC pipes. Now, let's look at the growth drivers of this industry. Now, the main growth drivers of the global PVC pipes are growing urbanization, demanding larger and cost-effective sewage lines, rising construction activities. We like construction, right? Now, infrastructure activities are growing. Development also is happening along the chemical industry, oil and natural gas industry, and all of these things are adding to the growth of the PVC industry. And this industry is expected to reach 30 million tons by 2026, and that is great. Now, this is not a small growth in the government of India's infrastructure spending also, right? Now, construction spending, irrigation spending, replacement of aging pipelines, government is doing all of this, and all of this will also help the PVC pipe industry, which again, coming to Peter Lynch's theory, right? The company should be good and the sector should be not in the limelight, but it should become a great sector in the future. Now, the market growth in India is expected to be propelled by the government of India's greater focus on the end user application, right? Now, basically, the government of India has understood and they've done schemes like Housing for All, which is Housing for All by 2022, Nal Se Jal, which is another project which is coming out by 2024, Project Amrut and Swachh Bharat and National Rural Drinking Water Program. So, all of these things, different type of things require PVC pipes. Now, where are these being used? These are also being used in water supply, sanitation, cleanliness, cleanliness, sewage connection, water supply for drinking, and different type of schemes are also there. Now further, if you look at the pandemic, that has also actually increased the need for sustained investments in water management, sanitation, and sewage treatments, right? Now all of these things will boost the PVC pipes industry again. Now the fundamental principles of Lynch's investment lessons are simply timeless in nature, right? Ideas such as investing in businesses that can be illustrated with a crayon, basically avoid Bitcoin and businesses which complicated business models, sidestepping the urge to worry about excessively investing, and the correlation between good management and poor shareholder returns is something that is going to be useful for long-term investors like me and you. So we basically tried to understand what was happening with Peter Lynch's theory in India, and from the looks of it, Finolex Industries and the PVC pipe segment look like a proper winner according to Peter Lynch. But will they actually win in the future? Only time will tell. But right now they are doing really well. So this is a quick episode on how to apply foreign fund managers theories into India. So I hope you guys liked it, and if you did, click on the like button, share this with your friends, and subscribe. This is me, Shashank Guduppa, signing off. Take care. See you guys. Bye.